All right, let's talk about a really cool tool that can help you cut through all the noise in the market. If you've ever wished you could see trends more clearly and, just make calmer, more confident decisions, then you're definitely in the right place. So, have you ever looked at a price chart and just felt totally overwhelmed? You see the prices jumping all over the place, you finally jump into a trade, and bam, the market immediately reverses on you. It is so frustrating, right? And it's a super common problem that leads to a lot of emotional and, frankly, bad trading mistakes. So, where does all this chaos come from? Well, a lot of the time, it's the standard candlestick charts themselves. They're designed to show every single little price fluctuation, which, yeah, is accurate, but it also creates a ton of visual noise that can make it really tough to see what's actually going on. So, what's the solution to all that mess? It's getting a smoother view. And that's where a different kind of chart, called Heikin Ashi, comes into play. It's specifically designed to filter out that noise and just bring some clarity to the chaos. Okay, so what is it exactly? Heikin Ashi is a special type of candlestick chart, but instead of just showing you the raw open, high, low, and close prices, it uses a formula to average things out using data from the previous candle. And that one simple act of averaging is what smooths out the price action, making the real underlying trend way easier to spot. The name itself is actually the biggest clue. Heikin Ashi is Japanese, and it literally means average bar. And honestly, that is the perfect way to think about it. Every single candle you see is showing you the average pace of prices, not all that frantic moment-to-moment craziness. And here is where it all just clicks. Look at the left. That's a regular candle chart. See how messy it is? A jumbled of red and green. Now look at the exact same price action over on the right, but with Heikin Ashi. See that difference? It's night and day. The trend just becomes so obvious, which can really help a trader stick with a good trade instead of getting scared out by some minor little blip. So, how do we actually read the trend using these? Well, it all comes down to spotting three really simple signals. First up, a strong uptrend. What you're going to see is a series of solid green candles. But here's the crucial detail to look for: little or no lower wicks. That tells you the buying pressure is so consistent that the price isn't even really dipping down. That is a crystal clear signal of strong bullish momentum. And you guessed it, the exact opposite is true for a downtrend. You'll see a string of red candles, and the key thing to notice is that there are little to no upper wicks. This means selling pressure is completely in control. The price can't even manage to rally up. Again, it's just a very clean, super easy to read signal of strong bearish momentum. And the third signal is when things might be about to change. You're looking for consolidation or a potential trend change. These candles look totally different. They have really small bodies and, this is important, long wicks on both sides. When you start seeing these, it's a big sign of indecision in the market. The old trend is losing steam, and a reversal could be right around the corner. So what's the big payoff? Why would a trader choose this kind of chart? Well, it really boils down to making better decisions and having more discipline, and those are two of the most valuable assets any trader can have. The advantages are pretty clear. By filtering out the noise, you can spot the real trends faster. That clarity helps cut down on all that emotional, knee-jerk trading. And maybe most importantly, that smooth visual helps you stay in your winning trades longer. It's an awesome tool for beginners and seasoned pros alike. Now, of course, this isn't magic. It's not going to solve all your problems. Like any trading tool, Heikin Ashi has its limits. And that wonderful clarity it gives you, well, it comes with an important trade-off. And here is the single most important catch. Because the candles are based on an average, the price you see on a Heikin Ashi chart is not the actual price where the market is trading at that exact second. So what this means is you can't really use it by itself to figure out your precise entry or exit price. So what do the pros do? Simple. They use a two-step approach. First, they pull up the Heikin Ashi chart to get the big picture, identify the main trend and see how strong it is. Then, they'll switch back to a regular candlestick chart or use other tools like support and resistance to find a precise, actionable price for their trade. It's all about using the right tool for the right job. And I think this quote sums it up perfectly. Heikin Ashi isn't a crystal ball. It doesn't predict the future. Its job is much simpler and maybe even more valuable. It just helps you see the market more clearly, with way less noise. So the real question to ask yourself is, how could a clearer view change the way you trade?